My name is Adam, Chief Market Analyst. It is Sunday, the 17th of November. I'm preparing this for the week ahead of a month of 8, the 18th of November, Monday. Sorry, I started reading and got distracted there as well. So really, for me, I think the most interesting stuff that will come out this week will be CPI data coming out of both the EU and the UK. I really want to see how the economy has been performing. There's plenty of US news, and really, I think the ones that really most people are going to be focusing on will be the initial jobless claims. There's obviously a lot of eyes on the existing administration as it's exiting and the handover and so on. And so really that's where I think most of the focus will be. But I think for me and you, most likely on this side of the world, in these types of time zones, I think that CPI data is really what I'm looking for. And yes, I'm optimistic. I'd like to think that the economy is either flat or improving as opposed to stagnating or getting worse. So that being said, let's go to the charts. Okay, so we'll start off with the VIX, the S&P Volatility Index. And first of all, I just want to highlight here, you can see how much that volatility has come right down. So essentially what this is telling me is the market's nice and calm, nice and happy, no real issues there. Moving on to the dollar index. So here is worthwhile spending a little bit more time to kind of discuss what's going on here. We can see that it's range bound. Okay, so it's actually much more visually obvious if we switch it over to the monthly and just have a look at that. You can see we're now at the top of the range at the moment. Could it break out to the upside? Sure. It's interesting that only 2 months ago the concern was would it break out to the downside. So it is interesting just how much of a sort of goldfish memory that we generally have in the market. And the question is, could it break out? Yes, I think that is, of course, a possibility. Historically, it's interesting. I went and had a look at the charts. Historically, the dollar index actually tends to weaken. At least it did during the previous administration. And therefore, that's a possibility here. But it's not just that. I have colleagues who look at seasonality. They're also anticipating some dollar weakness. So that being said, of course, anything can happen. But I am anticipating at least a little bit of a correction this week. Let me explain why. So first of all, we had a really, really big move from the bottom to the top without much of a retracement. This was an absolute bare minimum correction. Usually we'd get a much bigger one, 382, 50 fib, 618 kind of thing, a decent correction back down towards here. We didn't get that. It continued straight up. It is overextended, even on the second leg up, and therefore I'm saying that it's just overextended. So I'd be surprised. I think it would be unusual if it had to break out here and just keep going. I think it's more likely that we will see a correction, potentially down here towards 105 before it takes another run at that level. We might even get a deeper correction if it is very, very tired. So there's my expectation this week is I think that there is primarily a greater chance of it having a correction this week, and therefore we could see a weaker US dollar. If we move across and have a look at the euro dollar, this one is kind of in a similar type of issue. You can see here on the monthly, back right down at the very edge of a monthly range. It's very much overextended again, kind of fell off a cliff post the election. You can see this thing. And the interesting part here was this was a minimum almost 382 correction from here, from these previous lows. Let's just kind of adjust that so we can get it there. There we go, 382 correction. And then it just sort of fell off a cliff here as well. So again, I think that it is overextended and due for a correction. So what I'm going to be looking for in the initial parts of this week is the 4-hour here has started to at least go sideways. You can see it's predominantly gone sideways away from this trend. There is some bullish divergence. And so what I'm going to be looking for here is going to be a break above these highs here of the, let's call it 106. That would then signal to me that the market is more likely heading up to 107 as part of a correction or retracement. At that point, could it then continue back down and take another run out? It's possible. If it's going to stay within the range, it's much more likely to come up a lot higher. So that is what is really on my trading plan for this coming week. Worthwhile having a look at a few of the other charts. For example, cable here also coming down that trend. The weekly, it looks much more obvious here. You can see this sort of dotted dash trend line. Let me just make that a little bit more visually obvious to see. There we go. So again, there's still some room. Overall, the trend is still nice and bullish, and therefore there is the potential here for this to strengthen. But again, it makes more sense to me. It's very much overextended. I'd really like to see a pullback here and potentially into that 1284 area, into the moving averages to find a nice potential shorting trend continuation opportunity there. The Australian dollar against US dollar also coming back down to key levels. Again, overextended. So pullback is not unreasonable. You can see that it's predominantly the US dollar that is driving this. We've got Kiwi dollar also back down at key levels here. Again, visually obvious when you look at it on the higher time frame, also due for a bit of a correction. So dollar yen, interesting to me. I'll tell you why. Because when you look at it from a monthly perspective, the overall uptrend is still intact. I think there could be some strong resistance up here at that 160.85 level. We know that the BOJ wants to make sure they really would like to keep it below that 150 level. So there's definitely some pressure for them, and they're working policies and taking different actions in order to get that to turn around. The market right now still wants to keep going up. I am just noticing a bit of exhaustion starting to come into the price action here, and I'd be interested to see if there's a bit of a correction to the downside this week. You can see we've had a move up and a correction, another move up and a correction. The corrections are starting to occur more frequently, and so it wouldn't surprise me if we had a lower high, possible head and shoulders behavior, or just a deeper correction this coming week. Dollar Swissy looking really good. Again, it's within a range here. It still has much more momentum to the upside. I wouldn't be surprised to see this continue up towards that 09 level there. Dollar CAD. So dollar CAD is special. From all of the majors so far, what makes it slightly different, aside from dollar yen, which does its own thing, it is broken outside of its range. It's been in this range for a while, going all the way back there to 2022. It's actually broken out. It looks as though it's rejected that level. Its resistance level is now support. And so for now, my expectation is dollar CAD will continue up. But any pullbacks would actually represent buying opportunities. Moving on to gold. Okay, so the big question is really, are we looking at a weekly retracement? We know that gold is in a bubble. Sorry, let me go to the monthly to make this a bit more obvious. We know that gold is in a bubble. How do we know this? Because the moves that we've had recently compare with the last really big bubble in 2011, after which, by the way, 2011, it came back down, 2013, all the way through to 2019 before it started to recover again. Not saying that's going to happen again. I'm saying that's how we knew it was a bubble. Next up, we can see here, looking at the current move, I think that there is a fair, reasonable potential for a correction to the downside. I've highlighted the blue areas, what I would expect reasonably on the monthly to be at least a decent correction, a healthy correction. Could it come back down as far as 2000 to test this level of resistance as support, or back up at the highs here around 2080 to test that? Yes, it could do that. That would put it around about a 618 retracement. However, I think that especially if we're likely to have, if this is just the beginning of, a new trend for gold in general for the next few years, I think we'll probably see a shallower retracement than that. But what I started to say at the beginning when we got onto gold was, if it is just going to be a weekly retracement for now, I would expect a bullish candle this coming week, which would signal to me that gold has taken, that it is still very bullish, lots of buyers, and it intends to take another run for it. However, if it is only just beginning its monthly correction, then I would expect further downside, which means that bears on gold or gold bears will still be looking for shorting opportunities, pushing it down towards that 2250 level, even further down to 2000. And is it possible that that could happen? Of course, it's possible. It can happen. That's what's really we're looking for this week, is to see if that's going to be the case. However, also, I would say it's overextended. You can see the candles starting to get shorter. We've got wicks coming in at the bottom. What is the signal? It signals that the market is likely, gold is likely to do a retracement in the early part of this week, which would provide shorting opportunities if it's going to do another leg down. So I'm looking for pullbacks into 2,600 up to 2650, and then looking for shorting opportunities there. Moving on to light crude. So light crude is unfolding beautifully as a potential bearish opportunity here. My sort of medium term to long term expectations, medium term meaning 6 months to 8 months, I'm expecting this ultimately to break down and head down towards that $40 level, possibly in between, maybe just as far as $50 level, but I think that there's a high probability that's going to happen. It's starting to look more and more bearish, especially on the weekly. It's got a strong level of support that it has to break through first before it can continue down, but right now, the trend is looking pretty healthy and intact for a move to the downside. Looking at the global market, starting off here with the Dow. So I find it interesting. We had a very bullish move, very much in line with the existing bull market. So just kind of put some context to it. Especially the monthly is a great way to do it. Having a look at this. This is kind of the Biden-Obama period, very nice and stable, recovering from the 2008, 2009 global financial crisis. This is sort of the Trump period over here, lots of volatility. And then we can see that post that, this is Biden then taken over. We have a bear market. This is COVID. This is a bear market. We can see consolidation and taking off here. So we could just see some strong moves here, bear market, strong moves. We're still, the point now is that actually, in theory, we've had our bear market, we've had COVID, we should be good for growth now. I don't think there's any excuse now for the markets to have any problems. So any problems that that happen now to me would be problems that didn't need to happen, and therefore would be more of a sign of sort of incompetence, or just killing the goose that lays the golden eggs type of thing. But here's what I find interesting, right? So we had a really, really, really positive response to Trump winning the election. We've already started to give back some of that stuff. So I'm not saying that's significant. I'm saying it's possible. It's just a simple retracement back into the old highs here. So it's coming back into the highs here. So what I'll be looking for here is a possible bullish candle, if that's going to be the case. Let's just undo that, and let's just do the first one. I keep overshooting with the mouse and getting the wrong one. So I'll be looking for a bullish candle here. If that's going to be the case, then it would continue to take up from there. Just wanted to highlight that I don't want to see these wicks starting to increase here, and that we're possibly going to have a correction there. Let's have a look at the S&P as well. You can see S&P came right back down. So big move up during election week. Post that comes back and gives back a lot of that ground. What does that tell you? It tells you that, yes, this might have seemed like optimism, but if it was optimism, it was short-lived. That's basically what it's saying. So if that optimism is going to remain, I would expect to see a recovery this week and keep going. If, on the other hand, it continues to move down, I start to pay attention. I want to know why that is the case. NASDAQ, giving back pretty much all of it did. This is interesting to me because what do we call this? Traditionally, this is known as a double top pattern. And if that is the case, and you can see the wicks coming in here, you can see that exhaustion coming in here, if that is going to be the case, and this is ultimately going to turn out to be a double top, that means that we would ultimately see a bit of a correction, quite a bit down, quite a bit further down. Okay, so just I think we need to be paying attention now. There's it could recover fully and just go back to normal, and therefore it's just a teething issue. It's just adjusting to a lot of new information coming in. Alternatively, this could turn out to be a red flag we need to be paying more attention to. Why is it? Honestly, I can't give you an accurate answer. It could be something to do possibly with now, and again, this is a hypothetical. This is simple hypothetical. Could be that the cabinet picks that are coming out now are starting to alarm people because they're not necessarily qualified to do the roles that they are. And possibly there's some now concerns coming in. That could be it. But again, I don't have that. If you have, by the way, if you do have some thoughts on that, I would love to hear it. Put it in the comments below. Please, I cannot argue that I'm informed on this one. So I'm just going to leave it at that. But I find it interesting that the market has reacted, that optimism seems to have just kind of vanished a bit. Okay, so look here again at this Russell 2000. Also, it's managed to break out of its range and now is sort of coming back down below that level, that 2,300 level of resistance. I think that is something worth paying attention to. We can see here the FTSE on the monthly coming back down to these levels here. So I am looking to see if we can find some support in this area, meaning a nice strong bullish recovery, or if we're going to break below that level in the coming week. The DAX as well looking okay. So the DAX has sort of come back down towards these old highs here, trying to find some support, and this week I'm going to be looking for a bullish candle here. Okay, could we come back down and test this level here? Yes, we could, but I don't think it's necessary. I don't think we're overextended. I don't think the market is pushing its luck too much, so I would think of that as a secondary option. The Nikkei, of course, still struggling in this area, pretty much treading water. And, we're also heading into November, December, we often get that Santa Claus rally. So there's more reasons why we should be expecting the markets to go higher. They don't always, it's not a guarantee, but it happens. It's a seasonal thing, and it happens frequently enough that it's not unreasonable for us to expect it to happen. So I'm curious to see what's going to happen over the next few weeks. Berkshire looking good. So again, Berkshire looking beautiful. That's a nice bullish engulfing candle, and it's continued to push high, and the monthly looks really good. So far, all of this that I see, I really like the look of that. NVIDIA is starting to stumble a bit. When I say stumble, I don't mean massive red flags or problems. I'm saying we're just starting to slow down a bit. Any kind of a correction here, to my mind, would be a good thing, not a bad thing. So I'm not worried about that. Tesla, what would be interesting to me, just purely from a technical perspective, would be if we fall back below this 300 level ultimately and close that way for the end of the month. That would kind of be a failure of it to ultimately break through. It would be an attempted breakout and possibly failure to do that. We'll see if that's the case. On the other hand, should it continue to close near the highs, then we'll obviously maintain that bullishness. But right now we could see that it didn't really have another week. It's pulled back in, and that is a bullish candle here. So this could turn out to be a buy opportunity here. The only reason I was kind of questioning a lot of it is that I don't think that the fundamentals of the company have changed at all, and yet there's been a massive increase in its value, obviously becoming a $1 trillion company. Not really sure how that happens when the basic fundamentals haven't changed. Okay, Vanguard looking good. I'm happy with this, but also you can see it's come back into these highs over here. The only other thing when I look at the monthly here is I could see that we had this this correction over here, and we're continuing up. Often when we've had a long move, and a correction like this, but it doesn't do a proper correction, no red candles, we could be at the beginning of just more exhaustion. And so starting to see the wicks occurring here just means that we could see a bit of a correction. And if it follows through in terms of cycles, that would happen in January, meaning that it would stumble through January. We would actually have not a bear market, but we would have a bigger correction. So in the past, usually historically, up until April, you really have the most growth, and then you've heard that expression, sell in May, go away, and then you have the Santa Claus rally. So you kind of tend to have a lot of your booms before April and then before around Christmas time. The big surprise market corrections can often happen in January. I guess it's winter in the Northern Hemisphere. Everyone gets depressed. Everyone's outlook, it's a new year. What's going to happen? And I don't know, who knows? It possibly kicks off with that. So if we're going to have a big correction, it might only trigger in January is what I'm saying. Let's have a look at bonds. So again, bonds here trying to slow down. You can see more green candles coming in, more wicks, but not enough buyers above a certain level. Meaning that we're seeing wicks above, not enough interest above that, but wicks below, meaning some buyers, and also pushing down to the downside. This we could delete. That wasn't triggered. In other words, we didn't break above the high of that, so we can leave it for now. And so this is almost more range-like behavior, the way that I look at it at this point. Now let's have a look at EURUSD. EURUSD is a little bit more bullish in general, and has been for the last couple of months. So you can see here it's trying to recover and push a little bit higher. I'd be interested to see if we follow through on that. You could see the strong support here, strong bullish candles, strong wicks here. And so that very nice weekly candle. Yeah, so there is some potential here for this to push a little bit higher. Let's move on to Bitcoin. So Bitcoin has had a big move up. Fantastic for Bitcoin investors. And so you can see here it's starting to stall now. This is normal and natural after a really big sustained move. Plus, we're also at historic highs. Okay, are we in a bubble? I mean, I can't say that with at this time. I think it's too early to say that. But we know that crypto, is still being adopted. And so we've had several bubbles in the past. There was a bubble, there was a bubble, there was another one. We've had them before. So to call it in a bit of a bubble is as soon as it starts going up towards 100,000, which I think is where it's really trying to get to, we could have a deeper correction. I think thinking that it's never going to come back down again is a bit, I'd just be a little bit cautious around that. But yeah, it's doing pretty good at the moment. I think any retracements here for now could be potential buying opportunities. And it is nice to see it having broken out of that after having spent so much time kind of wandering around. Now, again, Ethereum is not in the same kind of situation, but I will say that monthly looks really good. My expectation for now so far is that it would continue to push up. It's not as popular, clearly, as Bitcoin in terms of that, but that monthly looks good. So I think, the potential for this to go up to 3750 in the coming month or months is not unreasonable. There we go. So ladies and gents, I'm going to leave you with that. I hope that you have a fantastic week. Remember to keep calm and carry on trading, and I will chat to you in next week's episode. Thank you.